The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the eucalyptus leaf-eating koala bear of Wall Street. We are up 13.5 points on the S&P cash, just a little over 2 billion shares as we start the day. So back into summer volume, I guess. And, of course, we're all awaiting with bated breath. That means that you need to put a worm on your tongue for the FOMC announcement tomorrow afternoon. In the meantime, we are in the stock market already in progress. And other than that, we're just kind of marking time here. I'm going to have to decide whether I want to keep my shorts going into what will be a volatile move tomorrow, no doubt. But we've had a fairly decent move out here. Interesting moves in some of the stocks that I've had. But blowout, no, not yet. But very interesting moves nonetheless. And we'll have to see how this market closes today. I've seen a lot of stocks roll over, but the indexes have not. And the question is to market participants one thing, and that is the raise in interest rates sooner and more gradual or later and more violent? And of those two, it looks to me like the stock market thinks that it's putting it off a little longer, and it will be more violent, as the Fed is almost always late to the party when it comes to cutting off easy cash and causing problems down the road. So we'll look at that. Of course, on this day in 1914, a young Jonas Salk is born. Medical researcher and virologist. He discovered and developed the first successful inactivated polio vaccine. He was born in New York City to Jewish parents this day in 1914. And of course, I guess I haven't seen anybody with polio in so long. It's I remember that our mailman had it, and would come through. One of our engineers here, who you never know who it is because they'll never tell you. It's just somebody on the other end. But it's either Steve or it's Al. His mother was born with it. And it happens. But I think, I'm trying to remember, I think the last person I saw was my mailman that had it. Of course, it was a huge plague upon the world, and thanks to him, they had a nice one. Ran in the family? I don't think it runs in the family. I think maybe you guys ran around where people had it, but it didn't run in the family. But polio, maybe you had a low barrier to having it. But certainly a scourge. Some people died. A lot of people disfigured, painful, and horrible disease. And a lot of people not wanting to vaccinate their kids now could bring that back one day. But why you've got it down, why invite something to come back and be a bad problem? Anyway, he did not patent the invention and basically gave it away. And Jonas Salk Institute is still a huge driver of medical research in lots of vaccines for various things. Anyway, just one of the great success stories out here, and what he did. Nuclear energy. You had a lot of people email me last night. Dennis Gartman apparently was on CNBC somewhere around 5 or 6 o'clock last night. And basically, he said crude was going to go to the way of whale oil, and that you'll just not even remember that it existed. The reason he brought up was something I've been covering in the Tech Insider for a while, and that is that while nuclear fusion has been a dream of the future, and we've lived with nuclear fission, which is breaking atoms apart, putting them back together and getting energy, which is a almost perfect way of generating electricity, has been beyond the grasp of a great deal of people. I started covering this, I think, almost a year ago in the Tech Insider, and that was Lockheed Martin basically said that they thought that they had an answer for this. There are giant programs going on around the around the world, actually. Most of these things started in the late 60s. That is when the Russians said that they built a way to generate electricity and harness the power of fusion. They probably oversimplified it a great deal. There's two kinds of fusions, and that is all the fusion that you put in a bunch of power and you get less back. And there's the kind of fusion where you break even and it actually produces more. That is the kind of fusion that we're interested in. High school kids as young as 12 years old have built their own fusion devices. You can go on YouTube and see a great deal of them. Fusing hydrogen, a special type of hydrogen, is not a big deal. In fact, you can order up deuterium, which is a extra electron circling a regular hydrogen atom. You can order small doses of it. Of course, during the Second World War, we worked very hard to make sure that the Nazis and the Germans' supply was problematic. They were using a dam to generate electricity to basically distill down what is sometimes called heavy water. Between that and having a little bit of tritium, tritium actually can be made during the fusion process by using a little bit of lithium on the walls of the device, whatever it is. Anyway, back to my story in Russia. They made a thing called a Tomac, T-O-M-A-C-K, I think it's the way it's pronounced, and this is the late 60s. They showed that they could actually fuse deuterium and tritium, and couldn't put enough energy in it to make it self-sustaining, actually put out more energy. But when you think about putting in energy and getting back energy, when you get into the physics of it all, basically you have to put in about 18 mega electron volts, which is the way to describe it. You get 28 mega electron volts out for a net of 10 mega electron volts, which may sound like a lot, may not sound a lot, but that's for every single atom that you fuse. And it doesn't take a lot of atoms to generate a huge amount of power. Now, what Lockheed Martin has been talking about is something called a low beta reactor. And beta is a measurement for just how big of electric field has to be used on the plasma. And I need to explain plasma. If you take a gas, like any kind of gas, like air, and you continue raising the temperature, it goes to a fourth state of matter, which is known as plasma. When gases go to plasma, you basically can direct them around like a fire hose using magnets. They become incredibly drawn to magnetic lines. And if anybody has used a wine cork remover, looks like a little pig's tail with a little screw kind of thing, that's exactly how it goes around magnetic lines. So you can pretty much run them right straight down a tube if you want to. And as long as you have enough magnetism, these things will and can be directed around with straight just magnetics. Now, it takes a lot of energy, and of course, a lot of the new magnetic technology where they use superconducting magnets are used these days. But what the a pretty brilliant guy at MIT decided to do was leave and go to work at Lockheed Martin for building a power supply for deep space exploration. And of course, it needed to be smaller, needed to be lightweight, and of course, with the possibility of humans, you needed to be able to shield it from the beta particles and alpha particles that come out of this. Basically, they came up with a kind of a blast from the past in the 60s of a design that you can also find all over YouTube. He basically decided to design it a slightly different way. A beta more than one and a beta less than one basically describes on how much magnetism you need to use. Basically, their design is kind of a big square. I'm going to call it a big cube. And magnets are on all 6 sides of the cube, and you basically make a little sun inside all 4 walls, or all 6 walls, actually. Does it work? We're going to know in about a year. Theoretically, they are going to publish the papers on this in the next 3 or 4 months. This design would have some real requirements, and that is, one, it couldn't be scaled up. So you could make a single plant that would handle a city of 1.5 million. Basically, their design works very narrowly. You can make about 100 megawatts of power with it. That means that about 100,000 homes per unit. It would fit in the side of in a little bit smaller than the size of a semi tractor trailer load. It would still have to be shielded, even though it's not going to create a lot of radioactivity. It would create some, and basically a wall of thin lead or thicker water would be enough to pretty much contain all the alpha and beta and X-ray particles. If you need 2 or 3 of them, you just build 2 or 3 of them and move them closer to the people that use them and the communities. And so you go to a big city, you may need 100 of them for LA. The opposite idea is what's all over the world now, which is these giant tomahawk reactors. Those reactors may be ready to go in 2050, 2060, 2070. He thinks that this reactor would be available in 2022, and actually they would show the first prototype in 2017. We'll talk more about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, just wanted to finish up my thoughts on nuclear energy here. And, of course, everybody says nuclear energy, and they think fission, not fusion. Fusion, of course, could use basically seawater, and tritium is made from a chemical reaction with lithium. Of course, we mine plenty of lithium, so that's not a problem. You could also design it another way, and that's to use helium-3. The surface of the moon is covered in it. Basically, all the energy that we would need could come from about 3 shuttle bays full off the surface of the moon, and that would hold us for probably time immemorial. So there is that, but seawater would be, we could pretty much make all the heavy water we need to use in a reactor, and most of these reactors would probably use maybe 50 gallons of it a year of water. It wouldn't be a whole lot. Tritium, of course, comes from lithium, and that would be a few pounds of lithium. So a couple hundred laptops maybe. So that wouldn't be a problem either. Anyway, Dennis Gartman got off probably a little half-cocked in the way of pronouncing oil dead already last night. But there is a pretty easy road you could see, and we're going to know in a couple of years. Probably know within a year whether this works or not. Prototype, like I said, in 2017 from Lockheed Martin, and 2020, 2021, first manufactured units. Because of the size of this thing, they would be able to mass produce them. It's not going to be like all the other places with these Tomahawk reactors that take 20. Some of them have been under construction for 20 years. And, of course, these are all just prototypes, and no one's even tested them yet. His will have the benefit, or the Skunk Works at Lockheed will have the benefit of basically being used. They've already been able to make it work about 200 times. But it looks interesting. Most of the big problems, like shielding the inside of the device from immense heat, has already been figured out. Basically, they're going to use something like the shuttle tiles and coat the inside of it and kind of spray it down with a little bit of lithium, and that will make the tritium that you need to fuse everything together and make it loose. And basically a heat exchanger to get the heat out of it, and you basically put liquid sodium down it and put it in a heat exchanger and boil water and turn a turbine. And so you could pretty much go into any coal-fired or natural gas-fired plant that existed today and switch it over fairly quickly. So a bright future for this technology. And like I said, it's not that far off. A lot of this technology was 20, 30 years off into the future. And this may be one way of getting it out and moving it out very quickly, albeit a small version of what everybody thought. They thought that it would be build one giant one for the city of LA or something instead of a whole bunch of small ones. But the whole bunch of small ones may be exactly what the doctor ordered. But looks bright, and could crude go away? Yeah, we're going to have to get much better battery technology than Tesla has right now, or even Tesla's talking about. But that may be on the horizon. I wrote about that in the Tech Insider last week. Anyway, make sure if you want, give me a call at 877-927-6648. And you can email me at path@tfnn.com. But certainly why crude is down here, think some people talk probably a little bit too much about $10 oil. Don't think it's ever going to get that cheap for a barrel. But Gartman, I think, said that, and someone repeated it, but I think he was kidding. But could we see $50 a barrel crude in 15 years? I think we could. I think as alternatives that really work, not we wish that they would work, but basically physics that's known to work already. It's now a problem of engineering for the most part. And if this works, a brave new world without any carbon footprint and no new real problems with radioactivity. The worst that this thing makes is a small amount of 12 years. So talk about it later.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, what do we got going on here? GDXJ. And it looks like we've got a caller, and it's John in Philly. How you doing today, John?
Good afternoon, David. Thanks for taking the call. And by the way, kudos. Appreciate you describing that fusion reactor process and the state of the art. I had actually read that Lockheed Martin article a couple of weeks back, and so for you to kind of round that out was very helpful. David, I wanted to ask you about gold, silver, and mining equities, and I will make note that that your position on just patiently waiting, thinking that a washout in the gold price is likely, and you've been sitting waiting for that to occur. It hasn't happened yet, but just sitting patiently has served you well. And with that perspective, given that names like GDXJ and GDX and silver and a great many individual mining equity names are just sitting right at new lows, I wondered if you could share what your thinking might be, if you have any, regarding timing timing of when you might anticipate a washout to occur, if you have some, and how much lower you'd be personally looking for, say, percentage-wise on either gold, silver, or equities as a group.
I don't think gold has to go that much lower, maybe $1,100 or something. To me, the big problem is that these poorly run miners just don't have any cash. They're going to have to go back to the well, and at $1,200 or $1,300, that's still not enough cash to keep these guys out of the poorhouse. So I guess I want to separate gold from gold miners first of all, because I think that's two real different issues. Now, one of the things, I'm showing a chart right now of the GDXJ, and the energy from what was the this big kind of, well, let's just call it a W pattern out here. Let me ease it up here. You had a kind of a nice run from December 23rd of 2013 up to the March 14th high of 2014. And a pullback to May 28th, and then the next high that broke above the previous high on July 10th. And you had some volume, but the thing instantly reversed out here and blew off the high, and it came back down. Now, you probably can't see this real easily on my charts, but the energy from that December 23rd, 2013 leg to the March 14th high compared to the July 10th high back down to the October 8th low is why I have not been very excited about thinking that we were going to have any kind of V bottom on gold anytime real soon. The energy down was probably 20% stronger on that last move all the way down. Yep. And, of course, you had some high volume lows that were kind of dancing around out here. Do they have to go much lower? The answer is no. But after a huge move down with energy like that, it is rare to see a V bottom. More likely, you see either consolidation or lower lows. So if the case is I got to buy and go long, I'm waiting for that. Is the case that maybe we get a V bottom with a blowout, like a $100 move down one day in gold? That would be more likely. But we could just go sideways here while enough of the gold miners go out of business to bring the new supply in, and that helps out the price of gold, right? But too many, I think we've got a lot of gold miners that bought a lot of land that's too expensive, and it kind of reminds me of my days when I was racing. I met most of the owners of these tracks from Daytona to Homestead and some of the tracks up north. And the old joke in the racing business is you want to be about the third or fourth owner of a racetrack. You don't want to be the first one because it always costs way too much money to get into it. And each person subsequently loses just a little less money when they go bankrupt and have to sell it. And by the time you get to about the fourth time...
That analogy sounds apropos, David.
And I think that's what we're looking at in gold here. And that is a lot of these guys just bought it way too high, invested thinking that gold was going to 3,000, and they were buying on the way up instead of buying at 2,000 when gold was trading at 276. They were buying gold in the ground at $1,500. And it doesn't matter how much you hedge, eventually that's going to run out. And I don't think a lot of these guys hedged at all because they thought it was going higher. And so to me, it's just a bad management, bad trading in that they don't buy when things are at the bottom. It's just like the stock market equities. Everybody wants to buy these companies out when they're at all-time highs. Why couldn't they be buying them out in 2009 when they were at all-time lows? I don't know.
Indeed,
it just seems
indeed.
Huh?
Let me ask you to one last thing, if you will, and you appreciate your clarity is spot on. In the case of gold, since you are looking for a washout of some sort, and just to repeat what you said, doesn't have to be all that particularly severe. Do you have any personal views yourself as to prospective timing? Or no?
I don't know explicitly. I suspect after the elections on Tuesday, we're probably going to start seeing the Fed, who's already talked about bubbles somewhat, get rather more aggressive. And the idea is if they can start raising interest rates slow but steady, it's better than waiting a little while and having to go aggressively. And from the notes in the Fed, they basically are saying that we want to, up the rates, 0.25%, maybe every 6 months or something. Extremely slow over a matter of 3 or 4 years, instead of having to hike at a full percentage every couple of 3 months, right?
Sure.
And so that's the argument. And, of course, the Fed in the past, and they acknowledge it, have always been late to the party, and then they've had to drop the hammer, and then they've caused their own recession again. And I think there's been enough discussion that this time they want to get in front of it instead of wait until it hits them in the rear end. Mm-hmm. And to me, that means that we're probably going to see a slow but steady interest rate hike up. And that could put pressure on gold for years. I mean, until they're done doing it. You would have to actually... Now, what happens if these guys actually are behind the curve and we start getting inflation? Then you're going to see gold move again. But I don't see a whole lot of inflation. In fact, I see deflation everywhere I look. And that is problematic for them because there's no easy way to fight deflation from the Fed's point of view, so that they want to always go to the inflation mat. But they want to get out of QE and they want to get out of the interest rates. And so, is this as good as it gets? Kind of tough to tell, but I would rather sit on my hands here and wait for either a long consolidation or a blowout to the downside. So, does it take a year or 2 years of going sideways, interest rates hike, and then we see gold move again? It certainly could be that way. I mean, we had a 10-year span or a 12-year span of gold doing nothing from, 88 to 2000?
That's correct.
So it's got a history of doing nothing for a very long time. We've had probably the golden years of trading gold, and maybe we're just expecting too much out of it. Maybe it needs a couple of years of consolidation before the next move. But
all right, very good. I appreciate it.
I guess that was the end of him.
Yes, David, I appreciate that. I'm just wanted to, just in a parting shot, ask you just one follow-up on the daily chart of GDXJ that you posted in the Tiger's Den and Tiger TV. I see we came down with a fair amount of force, as you rightly point out, and GDXJ bounced, then came down with a little bit, less force, and it is holding the lows of last December 2013.
Yeah.
Just a follow-up question. Is that significant for you?
Not without a move in gold. I think at a minimum you need about $1,400 gold to make these companies profitable. Mm-hmm. And I think the reason it's just sitting here is the thought that maybe it will go up. The problem is they're still burning cash right now. And it won't take but a couple of quarters for them to burn through all of that, what they've got, and have to start issuing more shares of stock. And
right.
that puts the lid on the top of this as long as we see, $12.50 gold. It doesn't have to go. It doesn't have to go down for these guys to go belly up. And that is the disconnect between these two, and that so many of these gold companies bought gold at the peak. And they have to have peak prices to continue to exist, and they don't. So with what we know is most likely higher interest rates next year, even if it's just 0.25% every year to get them back to normal, we're probably going to see higher interest rates next year. And I think gold is telling this, at least that part of it already, and crude's telling us deflationary pressures. To me, both of those things are problematic in gold. So would I make a great trade, I think, if I could buy gold at $1,100 in some kind of V-bottom thing? I think at least short term I'd want to play it. long term, I think you still have that problem. And I would still, unless we saw some kind of major change in the dollar index, major change somewhere else, I would still probably be buying gold and not the miners down at $1,100. I'd want to see some kind of long-term change, or what I thought was a long-term trend change in the dollar index, in inflation, in something to make me think that these gold miners are not just going to come down here and implode for a while until there's a handful of them left. And those are going to be the ones you want to buy in the next move up in gold.
Yeah, very thorough. I appreciate your review of all that. So thanks for your time.
You bet. Thanks. I have a question in the gold. Look at AUY. I don't really know what you want me to look at. Things just continuing heading down. And energy actually has increased the last 3 legs. So I don't know what everybody's looking at. Everybody bought too much gold at the highs, and I'm not a big fan of shorting gold down here, but gold miners certainly look like, as long as gold doesn't have any upside to it, miners have downside, and gold just could go sideways forever. These guys would still go out of business. So anyway. What else do we have going on here? Oh, let's get to what's moving out here. We've got a couple of minutes left in this segment. And, of course, at the highs of the day, or pretty close to the highs of the day, up 14.5 points, 2.4 billion shares. So is there enough volume to maybe continue moving up a little higher? I think we could. And maybe they're just going to run it into the FOMC meeting and go a little higher. But this is about the height of my pain tolerance here, in thinking that if we don't roll over by the end of the day, they're probably going to go out there and ring the bell at the highs one more time. I would probably have to have a close below 1970 on the S&P cash to have me sit on my hands for another few days. I don't have any huge losses compared to the wins we've had over the last few months, but no loss is good. But you always try to keep them small. Buffalo Wild Wings had earnings last night and didn't do much until they started saying that they were going to raise prices. Apparently chicken wing prices were up. But this is about as good as it gets, and that is, this thing is coming right back up into this. I actually ate lunch today at Buffalo Wild Wings, and this thing had a huge gap down on 730, and we, of course, coming back into that gap. That gap happened on, 4.2 million shares. We're doing about half that today, and I guess the idea is that if they can raise prices yet again, and I'm mad at them for raising prices over the last year. I used to go there a lot. Now I only go there on Tuesday when it's half-price wings, and Thursday when it's half-priced chicken nuggets, because I can go out and get a very nice steak dinner for what it costs to eat Buffalo Wild Wings. So to me, I can go to nice things like Cody's Roadhouse and buy a extremely nice ribeye dinner, or even a sirloin or something else, or a filet, for what this is. So to me, is it this getting so expensive as to be ridiculous? I think it's getting awful close. And like I said, I would rather, for the same price, go and eat a really nice dinner at Cody's or something. We'll be back in a minute.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we were talking, you can continue to raise prices at Buffalo Wild Wings, but my argument is that I can go to Chili's and get a half rack of ribs, which is probably just about as much meat as on 12 wings, for the same price, and get free chips and salsa. Sit at the bar and watch, I think, 6, 7 televisions, just the same thing. I can go to Fridays, I can go to Chili's, I can go to Applebee's. They also have some fairly decent meals for the price of 12 wings. And, of course, all you get with 12 wings is 12 wings. You can go to Cody's Roadhouse. I can get a filet for about $16, and that includes a salad and bread and basically a full meal. Other than it's got lots of sports, and maybe you go to watch the last game of the World Series or something, at one point it's going to get rather expensive compared to the other restaurants, and everybody's got TVs these days. As a chart reader, I just see the volume of what's going on here, and I see so many stocks trying to push up and higher with a lighter volume today. Makes me think that we're probably fairly close to the inflection point where volume either needs to come in or we're going to have probably a fairly decent pullback to about 1950. We could get that 1950 pullback and still go higher. But my guess is that the market's getting ready for at least a little small pullback in this market. And at that point, if we don't get any energy to the downside, we can probably look at the markets rolling up and trying to go tag the high side of this. But too many charts I see out here like Buffalo Wild Wings. A lot of them also out here that look like coaches, and that is bouncing along these bottoms. Coaches had a high volume low down as high as 38 million shares. This thing has been doing nothing. Earnings out again today. Big disappointment. Volume picking up, but still probably not going to bounce through that monstrous low. But 16 million shares was the low from June 25th. We got 12 million shares now. Probably an hour. Probably not going to hit it. But this is the kind of long consolidation that comes with massive failures in stocks. And while you've had some small bounces out of this thing, I would like to see this thing consolidate out for probably another 2-3 months at $33 before I would jump all over it. Kohl's store, another earnings disappointment out here for retailers. And as far as I can tell, I'd say 8 out of 10 stocks are failing on earnings, not succeeding. Of course, it's the one that succeeds that drives the market, like Amgen today. Kohl's down on huge volume, blowing out the previous gap up from July 14th, where this thing popped up with 7.3 million shares. We already got 7, and we're lower in filling that gap. So the next door open for Kohl's out here is the low of July 14th at $50.51. And going into Christmas, none of these things look that good. You can make a case for an ABC down on Kohl's. Basically, did an ABC with a little over 52% retracement to the C point on October 23rd. This would be the 1-to-1 ABC would take you to 51.48, and that's close enough to this low at $50.41 to make me think, yep, we got it. You got an ABC to $50.51 on this. Tesla, could this be yet another ABC down for Tesla? It certainly could be, and that's why I'm looking at some of these moves. This would take a 1-to-1 to 196.38 on Tesla on this smaller ABC from 265 is the 8 point. Anyway, we'll see you tomorrow. Same bat channel, same bat time. Sell when you can, out when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.